You know, for the longest time, it felt like serious investing was something that happened behind closed doors, right? In these stuffy, mahogany paneled offices, just for the super rich. But wow, a digital revolution has completely flipped the script, putting these incredibly sophisticated financial tools literally in the palm of your hand. So how do we get here? And more importantly, what does it all mean for your money? Let's find out.
With all these new apps and platforms promising to make you a smarter investor, it really all boils down to one crucial question, doesn't it? Is automated investing actually worth it? I mean, is this the key to unlocking your financial future, or are there some hidden costs we really need to be aware of? That's exactly what we're going to break down right now.
So first things first, what in the world are we even talking about? A robo-advisor, well, it's basically a smart computer program that acts as your digital investment manager. It uses these complex algorithms to build and manage a portfolio for you, usually with something called ETFs, which are just low-cost baskets of different stocks or bonds. The real goal here is to take our own emotions, all those gut reactions, out of the equation. Because let's be honest, that's where most of us make our biggest mistake.
And how does it work? Well, the process is incredibly simple, really. First, you'll answer a few questions about your financial goals and how much risk you're comfortable with. You know, are you saving for a house or for retirement? Then, based on your answers, the algorithm gets to work building a diversified portfolio that's tailored just for you. And the best part? It handles all the ongoing maintenance, automatically rebalancing your investments and reinvesting your dividends to keep your money working hard. So why has this technology just exploded in popularity? Let's get into the really compelling advantages, the power-ups, if you will, that have made robo-advisors such a game changer, especially for a new generation of investors.
Okay, let's talk about the big one, cost, because this is where robo-advisors really shine. A traditional advisor might charge you 1.5%, maybe even more, of your assets every single year. A robo-advisor? We're talking somewhere around 0.35%. Now, that might seem like a small difference, but listen, over decades of investing, that extra 1% you're saving can compound into tens of thousands or even hundreds of thousands of dollars in extra returns. It's a massive advantage.
And that leads right into accessibility. Remember those exclusive offices I mentioned that usually came with super high investment minimums? Sometimes you needed hundreds of thousands of dollars just to get in the door. Well, many robo-advisors have a minimum of zero. Yep, $0. You can start with whatever you've got. This single change has thrown the doors to serious investing wide open for millions of people who were totally locked out before.
And the benefits just keep coming. You get this amazing set-it-and-forget-it simplicity. You get a strategy that's driven by pure logic and data, not fear. The algorithm isn't going to panic sell when the market takes a dip. A lot of them even offer really sophisticated features like tax loss harvesting, which is just a smart, automated way to lower your tax bill. And you get all of this with 24/7 access, so you can see exactly what your money is doing whenever you want.
But look, it's not the perfect solution for absolutely everyone. To get the whole picture, we have to look at the other side of the coin. Let's talk about the limits of automation and some of the potential hidden costs you need to know about.
So this is where you really see the trade-offs. A robo-advisor, it's brilliant, but it offers a one-size-fits-most approach. A human, on the other hand, can create a highly customized plan just for you. A robot is only focused on your investments. A human can give you holistic advice on everything else: your estate plan, taxes, insurance, you name it. And maybe most importantly, a robot can't offer you that emotional support, that behavioral coaching when the markets get scary and you're tempted to hit the panic button.
And there are a few other things to keep in mind, too. Your investment choices are usually restricted to a set menu of funds, mostly those ETFs we talked about. If your financial life is kind of unique, maybe you own a business or inherited some complex assets, a robo-advisor just might not be equipped to handle that. And you do have to watch out for certain account fees that can sometimes pop up, especially if you have a smaller balance.
Okay, so if pure automation has its limits and traditional advice is super expensive, what's the solution? Well, this exact problem has led to the rise of a new option, the hybrid model, which really tries to give you the best of both worlds.
The equation is actually pretty simple. You take the low-cost, super efficient automation of a robo-advisor, and you combine it with on-demand access to real human financial experts. That's the hybrid model. It's designed to fill all those gaps we just talked about, giving you powerful tech that's backed by an actual human brain.
This table really lays it all out pretty clearly. Pure robo-advisors are going to be your lowest cost option with little to no human advice, which makes them awesome for beginners. Traditional advisors, they're the highest cost, but you get a dedicated, personal relationship, perfect for really complex situations. And that hybrid model, it sits right in that sweet spot in the middle.
A medium cost for automated investing, plus human advice right when you need it. It's fantastic for people whose financial lives are starting to get a little more interesting.
So with all these options on the table, the big question becomes, which one is the perfect fit for you? Let's quickly walk through a simple framework to help you make that final choice.
A pure robo-advisor is probably your best bet if you're just starting out, if you love a hands-off approach, and if keeping those fees as low as humanly possible is your number one priority. If your financial goals are pretty straightforward and you're totally comfortable managing everything through an app, this is an absolutely fantastic tool.
On the other hand, you should probably lean towards a human or maybe a hybrid advisor if your financial life is getting more complex. Maybe you have a high net worth or you want a business. If you truly value a personal relationship and need advice that goes way beyond just picking funds, or if you know you're going to need someone to talk you off the ledge during a market crash, well, that human touch is just invaluable. So ultimately, there is no single best answer here for everyone. The right choice is completely 100% personal. It's all about understanding your own financial complexity, your personal preferences, and what your specific goals for the future really are. And that leaves you with the final question to think about for your own journey. As you look ahead, what does your financial future need most right now? The incredible efficiency of automation or the personalized wisdom of human assistance? The answer to that question won't just define your investment strategy, it's going to shape how you build your wealth for years and years to come.